Aditya Khemka, fund manager at InCred Asset Management, Johnson right now with his thoughts on all that's happening in that space. And Aditya, thank you so much for taking the time out. I know we spoke to you when this first rumblings of this came in. Now Donald Trump is reiterating that as well. I'm guessing your answer still stays the same from what had happened the last time on the impact on the healthcare space in India.
Yeah, that's correct, Neeraj. Good morning. My answer hasn't really changed. The risk in the space has gone up and the reward has not. So from an investor standpoint, doesn't seem lucrative enough a space to invest in.
Okay. And now, Aditya, quick follow-ups here. The belief that a few people have had is that when we are talking about these pharma tariffs, the ones which are established in US or have health practices in the US and are exporters are the ones which get impacted the most. But one would reckon that even the secondary suppliers, right? So if CDMO companies are not supplying the final ingredient, but the intermediates, right, or APIs, do they stand to get impacted as much if indeed these tariffs were to come in? I mean, have you given some thought to that?
Yes, we have. So basically, let's divide CDMO companies into two parts, Neeraj. One would be companies that supply to generics. The other would be companies that supply to the innovator pharma, the big pharma out of US, Europe, and Japan. Now, because they supply intermediates and API, first of all, we aren't clear if the tariffs, if at all, as and when they come, would they be applicable only to finished product or would they be applicable to intermediates, API, what have you, any stages in between. But let's say that clarity emerges and let's say it applies to everything. Again, because the business with generics is so tight on economics for the generic company themselves, the impact of the tariffs on the intermediates will probably be borne partially by the manufacturer slash supplier and partially by the customer. But on the innovator supply side, which is true CDMO, as we call it, the CDMO business that really involves doing some high-end cutting edge work, that CDMO business will have the ability to pass on the entire burden to the customer. Simply because for the customer, the intermediate cost is negligible as a part of his overall cost of production. So they wouldn't care, if the tariff has to be borne by the customer.
So that's the POV of the Indian pharma companies. Very good morning, Aditya. The point is that what is the end goal of the tariffs? The end goal of the tariffs is not just to increase revenues. It's from the US administration perspective, it is make in America, right? How much of a realistic threat is that? Because we keep going into this seesaw on the impact on Indian pharmaceutical companies. Is there any clarity that you have been seeing so far?
So the clarity we get from pharma companies, talking to pharma companies themselves, is that there is no way they can manufacture in America. One, there is no capacity there. For itself to establish capacities will take you 1 to 2 years to build the capacity. Then there is the regulatory process of getting it approved by the regulator, the FDA there, and then probably product launches. That's a 5 to 6 year cycle in its own. And hence, if the objective is make in America, which is the rhetoric, I think that cannot be served by tariffs. I mean, that just simply cannot happen because the cost of production might be 50-70% higher. And if you're putting 25% tariffs, it is still cheaper for the customer to buy from us, including the tariff, rather than to make it locally. So hence, I don't think the tariffs serve the purpose of Make in America at all. And remember, President Trump has another 3 years left for his term. So you don't know what the next administration will do. Will they keep the tariffs? Will they repeal the tariffs? So no entrepreneur takes a 3-year call, right? When you set up a plant in an advanced geography like US, expensive geography with expensive manpower, expensive land, you sort of seek a 10-year pathway, but there is no 10-year pathway here, given the administration has got only 3 years left, and you don't know what the next administration will do. So I don't think Make in America, in short, can be, achieved through these tariffs.
So in that context, if someone were looking at building a portfolio with additions of pharma companies from a 3 to 5 year perspective, what should they look at? I'm asking if there's a contra trade here, where perhaps companies with exposure to the United States should be in your portfolio.
No, actually, because if they impose tariffs and we don't do Make in America, the tariffs will probably stay for some time, right?
Okay.
Even if it is for the Trump tenure, which is another 3 years to go. So these stocks may not give you any returns for the next 3 years. So I would avoid these stocks, completely for the next 3 years, and then maybe look at what the new administration is trying to do, and then maybe rejig my portfolio according to the new policies of the new administration.
Okay, so would there be a focus on domestic focused companies? Would there be a preference there? And if yes, which ones do you see moving ahead?
So on the domestic consumption story of healthcare, I think we can play hospitals, we can play diagnostics, we can play domestic branded generic pharma companies. You have your different pharma companies which are mostly focused on India. I think those are the stocks which make sense for your portfolio for today and for the next 3 years. Because given the Trump administration, if tariffs come, these are the companies which are insulated, and also the API CDMO companies which do business with the innovators, because they will be able to sort of negotiate the impact of the tariff, if at all.
Aditya, the follow-up to that might be that if that is indeed the thing, would you, if so, I'm not asking you to make a portfolio recommendation at all, but what I'm asking is that in your mind, if people want to stay in healthcare, have investments in the pharma exporters, would you believe it might be a prudent move to consider, realignment of the portfolio while staying in healthcare itself?
Absolutely. Yes. So see, you cannot miss healthcare as a theme in India simply because we are just 3.5% of our GDP is on healthcare versus United States at 17, Singapore at 9, and Russia at 10. So clearly, there's a long runway for healthcare consumption in India, and that's the theme we should be playing at this point. And if you have exposure to exporters today, it just might be prudent to switch the position because the exporters really are exposed to a lot of earning downgrades, tariff risks, and the valuations aren't really discounting those things today.
I know you don't talk specific stocks, but there's big news on Divi's today. And just looking at a series of patent legal battles pairing out, how are you looking at those factors and anything specific that you're tracking on a Divi's or anything in that space?
So look, Divi's comes under the API CDMO space. They are partly generic, partly innovator API CDMO. And the legal battles are a part and parcel of the business when you do generics, because in generics, you're basically reverse engineering someone else's product. And if there is a patent, then you sort of fight it out in the court of law. So that's a part and parcel of the business. That doesn't bother me or my investment thesis on any company, including Divi's. But yeah, I mean, again, so I will not focus on companies that have a lot of generic exposure because the risks are really high, including litigation, US FDA, and then the tariff, and then the earning downgrades, which are coming because of some few large products going off patent. So I would rather focus on, companies that don't have this risk in their business model.